Hey guys, Rebecca back for another video. Today we're going to talk about investing. I am on my way to work. This is proving to be the best time that I have to try and film videos for y'all lately since I'm working so much, but hey, it is what it is. So, investing. I am switching up my M1 portfolios, but before we get into all of that, if you're new here, subscribe to my channel. I put up videos about investing and documenting my journey to financial independence, retire early on a middle class income. So if y'all are interested in following that journey, then hit the subscribe button down below and help my channel grow a little bit. So my M1 portfolios. First, I'm changing up my general investing portfolio. I mentioned in the previous video that I did that I wanted to get into dividend investing, but I was a little bit intimidated by it. Well, turns out that there is a group of stocks, an ETF type portfolio on M1 called SPHD, and that is a group of high yield dividend paying stocks that are low volatility. So that sounded really good to me. Trouble with that fund is the expense ratio on it is 0.3, which may not sound like a lot, but when you're an index investor like I am and you're used to those really low expense ratios from Vanguard that are 0.03%, you really don't want to pay 10 times that amount.
No, don't like that.
So I am going to link below to a video that I watched by Jamie Briggs over on the Money Matters channel. He actually created his own M1 pie that mocks this SPHD, but there's zero expense ratio, which is awesome. So definitely click that link below and watch that video. That was super helpful for me to try to get into dividend investing because that is pretty much the strategy that I went with. I watched his video and then I clicked the link to go and look at the pie on M1, and I added it to my general investing pie on M1. I did modify it a little bit. I took out the REITs from the fund because REITs are unqualified dividends, and my understanding of qualified versus unqualified is that qualified dividends have a better tax rate, so I took out the REITs so I wouldn't have to worry about having unqualified dividends in my slice of pie. And I did also take out some tobacco companies as well. Just when it comes right down to it, I just don't want to invest there. I mean, tobacco is not good for you. I work in healthcare. I just didn't want to do it. So because I took out the REITs and some of the tobacco companies, those companies had pretty high dividend yields. So I had to sort of readjust my own pie to try to keep that overall dividend yield payout for this group of stocks around 4%. And that is what the SPHD dividend yield is if you look it up on M1. The yield I think is 4.029 or something like that percent yield. Anyway, mine's very similar to that, but I did have to weight some other companies a little bit more heavily in my pie to get that dividend yield about the same. So that is what I've done. I've got a group, I think, of 44 dividend paying stocks in my general investing pie now. And y'all know the general investing pie for me, really it's just a big experiment anyway. I've got my Tesla stock in there. I've got the YOLO ETF in there. And now I have all of these dividend companies in there. I took out the VTI, the Vanguard Total Stock Market Index Fund, because I have that in my Roth IRA for one, but also I have something similar in my 403B at work, so I'm already heavily investing in broad-based index funds through Vanguard. So I've got that covered. this general investing account for me really is just a big experiment to see, try to learn a little bit about dividends and see what happens with this YOLO ETF and Tesla, because I like them. So yeah, the best way to learn is by doing, right? So I'm going to go ahead and do dividend investing and see how I like it. We'll just see how it plays out. I am still contributing $10 every Monday to my general investing M1 account, so it is growing slowly. All right, so we'll take a look at my new general investing pie, and as you can see, my variation of the SPHD is now set at 60%, and then we have Tesla and YOLO. Here is a look at all of the companies that are making up that dividend slice of my pie. These are all companies in various sectors, so that helps with the diversification of the portfolio. There's about 44 companies here. Y'all can see the asset allocation I've given each one. They range anywhere from 1 to 6%. And also, all of these companies are, or the vast majority of them are aristocrat dividend stocks, which means that the dividend yield has been paid out and increased year over year for at least the past 25 years. And now, past performance is never a guarantee of future performance, but if you're going to do dividend investing, then going with some aristocrat stocks is a pretty good way to sort of do it safely. Why dividend investing, though? If you're in the FIRE community, you know that the preference seems to be index investing, which I am a huge fan of index investing as well. But the main appeal for dividends for me is that if you have a good dividend portfolio built up, when the market takes a downturn, dividends can help smooth the ride out for you. So that's really appealing to me. And obviously, the earlier you get in with dividends, the better, you know. So that's what I've done. I have added dividends to my general investing account on M1. Now, moving on to the Roth IRA account on M1 that I've opened, I have changed that up as well. So, you'll remember from the previous video, I had the Roth IRA set up 100% VTI, total stock market, index fund, that's all I had. But I recently listened to a podcast by ChooseFI. I'm going to link that one down below as well. Y'all, give that one a listen. I know it's a little long. It's about an hour and 15 minutes, I think. But y'all, I learned so much from the ChooseFI podcast and the guests that they have come on. That is just a really high value podcast, and it's really motivating too if you're on this FIRE journey. Love the ChooseFI podcast. Anyway, I will link it down below, but I have changed up my Roth IRA as well. They talked about this in the podcast, but basically, VTI, the total stock market index fund through Vanguard, is every stock that is publicly traded in the stock market is in VTI. However, it's weighted heavily towards large cap companies, and basically they were discussing in the podcast about how when the market takes a dip, it's the larger companies that tend to take a hit, because these large companies, when the market takes a downturn, it means that their stock prices are overvalued, so they take a hit. So that means if you're 100% VTI and the market takes a downturn, then your portfolio takes a pretty big hit. And yes, I know volatility happens with the market. That's just the name of the game. But they discussed the advantages and disadvantages also of adding in some small cap funds to your portfolio, and that's what I have chosen to do. On the flip side of that coin, when the market is on a big upswing, they put some statistics into the podcast, but basically It's these small companies that stand to make a big boom when the market is on an upswing. All it takes is one small company to take off, and that's a huge, huge gain there for your portfolio. So, what I've done is added in 2 more index funds through Vanguard to my Roth IRA. So this is an ETF with all of the small cap companies in it. And I think there's something like 1,300 companies in there. And again, since it's Vanguard, the expense ratio is quite low. So I've added that to my portfolio. But the other thing they discussed in this podcast is that specifically if you're wanting large gains or the potential for large gains, you should add some small caps in your portfolio that are value small caps, which means that the stock price for these companies is undervalued. So you're buying them at a good price, basically. And then if one of them takes off or a couple of them take off, then you've made a lot of gains in your portfolio. And that is the other small cap value that I added into this pie for my Roth IRA. Again, it's through Vanguard, so the expense ratio is minimal. And now I have 3 funds in my Roth IRA portfolio. I've got VTI and the small cap funds and the small cap value funds in there. So everything is still through Vanguard, but I'm going to give this small cap strategy a go and see how it is. The disadvantage of choosing to do this is that sometimes small companies don't make it. And obviously when small companies fail and you're invested in those companies, then, you know, you stand to take a loss there. But so it is a little bit risky to have a heavily weighted portfolio in small caps, but risk tolerance is something that I'm okay with right now because I've got a long time horizon before I become financially independent and before I retire early and need this money. So I'm willing to take the risk right now of adding in these small caps to my Roth IRA portfolio. So again, this is just going to be another big experiment here. We'll see how it goes. Once I get closer to financial independence and retiring early, I can always adjust my allocation for this Roth IRA and sort of decrease the small cap allotment and maybe add in some bonds or something. But yeah, for now, I'm going to have VTI and these 2 small cap funds added into my Roth IRA, which may make it, you know, a little bit volatile, might make it more risky, but that's a risk I'm willing to take for right now. So, and you'll notice, or maybe not, I think it's actually not going to go through until tomorrow, but I had planned on putting $857 into my Roth IRA this month. I went ahead and put in $900 this month. I think that's going to get added in there tomorrow. And the reason I did that is just so that for the rest of the year, to max out my Roth IRA, all I need to put in is an even $850 every month. So that's the plan. I did $900 this month, and then I'll do $850 for the rest of the year, and that will max out my Roth IRA for 2019. So yeah, this is another long video. Sorry, y'all. If you've made it all the way to the end here, thanks for watching. Let me know what you think of this strategy down below. If you're a dividend investor, let me know down below. Yeah, check out the link to the Choose FI podcast that I put down below, and also to the Money Matters channel, that video by Jamie Briggs I linked down below. Both are really good watches. I'm learning more about investing every day, and that's part of being a good human, continuing to grow and learn. So yeah, thanks for watching this video and following me on my financial independence and investing journey. I will catch y'all in the next one. Bye.